what's up everyone? In this video, we're going to make it quick and to the point. We have a lot to talk about. The market is kind of going crazy. So first things first, we are seeing the S&P 500 down around 0.3%, which isn't like too much. It's not like too crazy just yet, but we did have a crazy recovery from open. So there's actually a lot of things that are going on in the market right now. Obviously, we have a problem with the Taliban in Afghanistan right now, and Biden is set to make an announcement at 3:45 p.m. Eastern today. So depending on what he says, that can definitely move the market. In regard to this Taliban conflict, I'm looking at certain stocks like Boeing, Lockheed Martin, ROC, what is it? NOC, sorry. So NOC, Lockheed Martin, Boeing, RTX, and then what was the other one? GD. So these stocks are defense stocks or defense stocks, you can say. Unfortunately, if this conflict with the Taliban continues to escalate, those stocks can potentially move up. So definitely keep your eye on those ones. And a lot of it just depends on what Biden says. Intraday, we can see these stocks are kind of already popping up. So just be on the lookout for those ones. Another reason the market's falling down is Chinese economic data came out and it wasn't the best. Basically, they had slower growth than expected. Their retail sales increased by 8.5% in July on a year-over-year basis, and it was expected to increase by 11.5%, and it only came in at 8.5%. So it's a pretty big miss right there. And then another thing is China's industrial production increased by 6.4%, and it was expected to increase by 7.8%. So, it's not that their data was horrible. It's just it didn't meet estimates, and that's not good to see. Another thing is if you look across the market, the SPY is down 0.3%, but the QQQ is down 0.8%, and it was actually a lot lower intraday. One thing I really want to point out is, here's my watch list over here on the left, and there are two green stocks on that watch list. One of them being, Berkshire Hathaway, which, most stocks are down, and Berkshire is just kind of like a stock or that just holds a bunch of other stocks, and it holds a lot of value stocks. So UPS is the other green stock, but besides that, we have Redfin down 7%, NEO down 6.5%, Tesla down 5%, Enphase down 4.5%, Penn down big, DraftKings, Palantir, everything's down. It shows a lot of selling pressure. I think this is a combination of a lot of investors just de-risking themselves. We have a lot going on in the market right now. A lot of these stocks are at some pretty high prices. So now is the time to protect yourself. If you're holding a lot of tech stocks, it would be wise to protect yourself. Obviously, you could maybe sell part of your position, but if you plan holding them for the long term, then maybe not sell. What I'm trying to say is you want to protect yourself no matter what, whether you take some profits or you buy some puts or whatever. Something important to keep in mind is if you're holding a bunch of stocks like meme stocks, you don't want to go out there and buy SPY puts because that's not really protecting yourself. You have to protect yourself with what you have exposure to. So for example, if you're holding a bunch of tech stocks like Apple, Google, Microsoft, stuff like that, you'd probably want QQQ puts. But if you're holding, some stocks that are in the S&P or something like that, you might want to go with SPY puts. And if you're holding small caps, maybe IWM puts, because that's the Russell 2000 ETF. So hedge yourself with what you have exposure to. If you just want a general play to kind of bet against the market, you can do VXX calls. Just make sure to get a good quality option. The more time, the better. You don't want to mess around with an August 20th 30 strike call. Those will most likely expire out of the money. So it's always good to get more time. I was looking at the December and October calls for the VIX. So definitely keep an eye on that. And then one other thing I wanted to point out that I saw was pretty interesting is, let me fix this real quick. Let me go to the ARKK. I saw this article today by Michael Burry. So we have more news from Michael Burry. If you don't know who he is the guy from The Big Short. He banked off of the 2008 recession. He called the housing market. And, he's a pretty well-respected investor. Of course, he's not always right, but he definitely has an amazing reputation. And he's still betting against Tesla and now he's betting against ARKK. So this is pretty big. So I definitely want to point this out to everyone. We can see that he has puts on Tesla, on 1.1 million Tesla shares. And he also has puts on like 235,000 ARKK shares. So be on the lookout for that. He's buying puts. He's a smart guy. So, keep that in mind. And all I want to say is protect yourself. The market can easily pop back up. But at the same time, we have a lot of unknowns right now, especially with this Taliban conflict. It's an unfortunate situation, and stocks are pretty high right now, and there's nothing wrong with protecting yourself. So I hope this video helped you. It's quick and to the point, and let's have a great week.